So SPHD is the Invesco S&P 500 High Dividend Low Volatility ETF. This thing pays a dividend yield or a distribution rate of over 3%, and today we're going to compare this to VYM, the Vanguard High Dividend Yield ETF. VYM also pays a dividend yield of over 3%, so today we're comparing two pretty similar high dividend yielding distribution paying type ETFs. Alright, so first off, what does SPHD track? Let's talk about that real quick. So SPHD tracks the S&P 500 Low Volatility High Dividend Index. How does SPHD find stocks? Well, the S&P 500, we know that that's where it goes to find stocks. Only stocks that can fall into the S&P 500 will be accepted to be added to this ETF, right? So there you go. Only bigger companies, S&P 500 type companies. Now, how do they do that? They take all those dividend ETFs, they take all the companies that pay dividends inside the S&P 500, and they put them together. They rank them in descending order based on their 12-month dividend yield. And so what's that mean? They take all the 500 companies in the S&P 500, they remove all the ones that don't pay dividends, then they put all the ones in descending order from the highest dividend at the top all the way to the bottom. And so now you have all the high dividend paying stocks in the S&P 500. Next, they take the top 75 stocks with the highest dividend yields. So basically what they do is they say, okay, all the different companies that we have this string of high dividend yielding companies based on 1 to, let's say, 100 something. Then they take the 75 highest dividend yielding companies. Now there can only be 10 stocks inside one sector, okay? So for example, if the industrial sector has 20 different stocks that are in the top 75, they're only allowed 10 in. So they got these dividend paying stocks, right? Next, they got to figure out the volatility part of this. So what do? They look at 252 days of trading data. So I don't know, call it like a year of trading data. They use the standard deviation, right? So they want to find the least volatile stocks. So they take those 75 stocks paying dividends that we talked about before, then they rank those based on the standard deviation, so how much volatility they have, right? So the least volatile are going to go up at the top, string it down to the bottom, and then they only pick 50 stocks out of all of these, right? So it goes from 75 best dividend paying stocks down to the least volatile, and they only end up with 50 stocks. So VYM, in my opinion, is easier to understand how to figure out which stocks go into this index. So for example, first off, FTSE High Dividend Yield Index is what this one tracks, okay? So Vanguard creates this ETF and it tracks this index made by FTSE, okay? The methodology FTSE uses to find stocks that should be able to go into this ETF, what they do first off, they take the average of all the dividends in the total stock market, okay? For example, let's say it's 2%, for example, okay? So if the average is 2%, every single company that has a dividend yield higher than 2% gets to go into this. That's it, right? So that's all they do. It's pretty easy. So companies that have a lower dividend yield than the overall stock market, they don't get added to this. Companies that have a higher dividend yield than the average stock in the stock market get to be added to this. And they don't include, I think, REITs. And so that's it. It's pretty easy, okay? So, let's now compare these two ETFs. Let's start off with the expense ratio. Okay, what do you think the expense ratio is for these? Well, interestingly, SPHD is a lot more expensive than VYM is. So SPHD 0.30% and VYM's only 0.06%, okay? That's 6 basis points. So that's a very cheap ETF comparatively. SPHD, it's pretty cheap, but it's a lot more expensive than VYM. So the question is, why would you go with VYM over SPHD if it's so much cheaper to go with VYM? In terms of total assets, they both are big funds, but VYM's a lot bigger with $57.9 billion in AUM, and then SPHD only $3.8 billion. So, still a decent size fund, but definitely not as big as VYM. Now, for all the dividend investors out there, I know that you want to know what's going on with the dividend, with the yield of this thing. So if you buy SPHD right now, you get a distribution yield of 3.78%, and it pays monthly distributions, interestingly, and VYM has 3.08%, so about 0.7% less in a dividend yield right now, quarterly payment of the dividend, okay? So 2 things off the bat. Now, some people really, maybe you're retired, maybe you're looking into early retirement, you're looking to financial independence, retire early, the FIRE movement, whatever you're doing, if you're into dividend investing, into distributions, and you want something that pays you monthly, well, here you go. You got some monthly payments. That's good. If you don't like quarterly payments, Well, VYM pays quarterly, so you might want to weigh that. How you specifically feel about this? So, okay, in terms of holdings, so SPHD, like we said before, should have about 50 holdings. That's 51. Maybe there's something for like some type of cash security in there to help with liquidity for selling out and stuff like that. So maybe there's just like an extra little security in there, but it's 51 securities, 51 holdings. VYM 446, so a much bigger ETF. And again, VYM has the entire stock market, so it ranges between all the different stocks. VYM is much bigger, SPHD smaller because it's just the S&P 500 or the top 5 largest 500 stocks. Let's talk about the holdings in the top 10 for these different ETFs. So SPHD has 26% in its top 10 holdings, and VYM has 23% in its top 10 holdings, so pretty similar in that front. So Altria Group is number 1 for SPHD, Johnson & Johnson is number 1 for VYM. Now let's see if any of these have some overlaps going on. So let's see, we have Kinder Morgan, we have Vornado Realty Trust, AT&T, Iron Mountain, Williams Companies, Dow Inc. What's going on in VYM? We got Johnson & Johnson, XOM, so ExxonMobil, JP Morgan Chase, Procter & Gamble, Chevron, the Home Depot, Pfizer, Eli Lilly, AbbVie, Coca-Cola. Interestingly, these don't really have much overlap in the top 10. I'm actually interested to see that because you don't see that very often. A lot of times you go with like a kind of similar ETF. They have a lot of stocks that are overlapping. Now in terms of sectors, the highest weighting sector for SPHD is actually utilities. Now VYM has the most financials is its top, and then it has healthcare. And actually I do like those two sectors probably a little bit more than utilities and real estate, honestly. So that's going to go into my factor into my decision making here. All right, here we go. Let's talk now about how these have performed versus each other. So these are returns of SPHD versus VYM. Now, if you look down here, the blue line is SPHD, the red line is Vanguard. Pretty easy because Vanguard's logo is red, right? So you should be able to remember that. Invesco, S&P 500, so let's say SPHD here, $10,000 invested in this fund back in December 31st of 2012, grew at 10.43%, and it grew to $26,095. VYM, $10,000 invested, grew to $28,230 with an 11.33% compound annual growth rate. So VYM did better in terms of growth over that time period. Now the next thing is standard deviation. Remember, SPHD uses standard deviation to try to find lower volatility stocks. What is interesting here? I am shocked. I don't know why this is. So the standard deviation for SPHD is higher, so it's more volatile than the standard deviation of the Vanguard VYM ETF, okay? Next up, the best year is better for VYM. So the best year was better. It has lower volatility, apparently. The worst year was better. Negative 6% is the worst year. Negative 10% for SPHD. And the next thing, the kind of crazy thing here, I'm shocked about this. Negative 30% drawdown for Invesco's SPHD. That was the worst drawdown in terms of peak to a drawdown bottom. And it was more, remember, this is the one that's low volatility. The low volatility ETF had a higher drawdown than VYM, which negative 23.98%. Okay, so why is that? I have absolutely no idea. Vampires, maybe? Ghosts? I have no idea. Halloween's coming up. I think I'm in the Halloween mood, so I'm getting excited about that. I don't know. I do not know why this is, okay? I'm just going to take an assumption. I have not looked into this. I have not done a lot of analysis on this. Maybe because the S&P 500 has been more volatile than the broader stock market recently. And maybe because SPHD is only investing in the S&P 500 stocks, where VYM is going through that larger pool of total stocks in the market. Maybe that has something to do with it. Besides that, the only thing I got is vampires. So again, we got blue SPHD, VYM in red. So VYM won in 2013, then SPHD, then VYM. SPHD lost more than VYM. SPHD lost out in 2019. SPHD lost out in 2020. SPHD lost out in 2021. And in 2022 so far, SPHD is doing better than VYM. What does this tell us In the short term, I think it's possible SPHD may do better than VYM. Why is that? Well, as you saw, it's got a lot of utilities. We're in quite a volatile market right now. It depends what you think. Maybe if you think that the market's bottomed out right now, I think VYM is going to end up being better over the next, let's say, year. But if it's not bottomed out, SPHD is probably going to do better. Maybe you don't care about the short term. If you don't care about the short term, what is my thought? My thought is that VYM is going to probably do better than SPHD over a longer period of time. So two ways to look at this. Depends how you invest. But I would say that if it's me, I'm more of a longer term looking investor. I don't really care about the short term right now for a company, for an ETF to pay me monthly dividends, because I'm not in that boat. I'm not retired right now. I'm just trying to invest this money, hold it for the long term. If I'm going for capital appreciation, I'm going to go for VYM over SPHD. You're still going to get dividend yield, you get quarterly distributions, and I think it's going to outperform over a longer period of time. SPHD should be less volatile, even though it's for some reason more volatile, which is kind of honestly shocking to me. I don't know why, but it is, between these two ETFs at least. And if I actually saw that SPHD was less volatile, then I might say SPHD would be a great thing to hold because you'll get less volatility. But apparently you're not getting much less volatility than VYM, because as we saw, higher drawdown for SPHD, and VYM has less volatility. So anyway, that's all I got for this one. They're both good ETFs. Don't get me wrong. I like them both. They both probably will satisfy different needs, right? So that's all I got for this video. Hope you liked it. Let me know in the comments if you do. Tell me, do you want to see some other ETF comparisons? Let me know in the comments. I would really appreciate it if you kind of drop me a note. Let me know what you kind of would like to see for comparison of two different ETFs coming up in the future. And I got another video coming up. Please watch that on the end screen right now. Thanks everyone so much for watching. I do want to remind you, I'm not a financial advisor. This is not financial advice. This is just my opinion. And let's face it, I am not right 100% of the time. So please do your own due diligence.